all consumers are going to have sticker shock. One thing I'm going to say is super important is understanding that customer psychology. It's way different. Now you're going to get almost every credit tier looking at used as an option. A lot of research is saying that used vehicles for like higher credit tiers used to be kind of a fallback. Now it's like a default.
It's everyone's dream to grow, to be a bigger dealer, to be a better dealer, or even get your first dealership.
Car buying is about the people.
Everybody wants to know what's the car business like, and they like to see under the hood.
Welcome to the Walk Around Podcast.
Welcome to the Walk Around Podcast. I'm your host today, Heather Wilkinson, joined by Jonathan Banks. Jonathan is the VP of Product Retailing for J.D. Power's retailing product portfolio. So glad you're here, Jonathan.
Yeah, thanks for having me.
Oh, we really appreciate it and want to really just get into and hear from your perspective. What are the big macroeconomic trends that dealers in the automotive industry should be thinking about?
Yeah, so 2026 is going to look a bit like 2025.
Okay.
And a lot of that is around
Economic uncertainty out there.
There is uncertainty indeed.
The last, week or so, the S&P 500 has been down.
And you look at even where the stock market has been going in the few days, there's a lot of volatility. And meanwhile, consumer confidence, as you probably have heard from others, is at one of the all-time lows. So consumers are not feeling great and not really knowing what's going to happen in the future. And meanwhile, they have been suffering from inflation that has been perpetuating even past COVID. So affordability is a really, really big deal. And it's even exacerbated even more in the auto industry because prices for autos, just happen to know this because I looked at it recently. New vehicle prices on the retail side for a 0 to 8-year-old pool have gone up around 45%. Wholesale prices also up around 45%. And meanwhile, in the wholesale market especially, you have a lot of volatility.
Yeah.
So when dealers are acquiring vehicles, they're facing high prices and volatility, which is tough. So consumers are stressed, dealers are stressed, and there's economic uncertainty. But meanwhile, the market is doing great. So when you look into it with fundamentals, it didn't seem like the market had a great year in 25 because we had like really good months and some that were stressful. But ultimately, when we got to the end, the used car market, especially, this is my focus, all the metrics were up for franchise dealers. Total sales up, profit per unit up, retail price up. Days to turn was actually up, which is negative, but still sitting below 50 days. So really healthy market in this uncertain time.
Yeah, well, when you think about it from used car perspective, affordability is an impact new cars and used cars. I mean, average monthly car payment, I think, is running around $800 a month.
Almost $750, $800 for many.
Yeah.
$1,000 payments.
Exactly. 84 months have become the somewhat of the norm.
Much more used.
Yeah, than what we've seen.
Yeah.
So when we're thinking about affordability and from a used car perspective, what meaningful shifts could we see in how consumers are shopping for vehicles or deciding, or even in some instances, are they delaying purchasing of vehicles? And what really should dealers be paying close attention to right now?
So many things when it comes to affordability. So first, there's the structural aspect. And what I mean by that in the used market is the available inventory.
Okay.
So you go back to 2019.
Yeah.
Half of the inventory on dealer lots were under 20 grand.
Okay.
Under 20 grand is like kind of a sweet spot.
Yes,
right?
definitely.
Today, 33%. So 33% on the dealer lots available to buy under 20 grand.
So we went from 50% to 33%. And is a part of that also tied to the fact that we have less vehicles coming off lease?
Maybe a little bit.
Okay.
Most of it really has to do with the richer mix. So the OEMs, so remember, our supply in the used comes from years ago, right? So we're getting fed from the low sales of 2020, 2021, 2022. But remember what the manufacturers did during COVID years is they started selling higher trim, richer mix, moved away from cars. So you got the mix factor and you have the the higher mix just from segment and mix from trim level, like content.
Yeah,
So-
vehicles that are being traded in are more expensive vehicles to begin with.
The younger vehicles being traded in are more expensive. And to your point about lease maturities, they're going up, but there's not as many as there used to be historically. So that's another interesting dynamic. It's going to get better in 26, but so that availability of inventory is one thing. Now the psychology of buyers is changing too, which one thing that people kind of thought was going to happen in 2025 is affordability was going to drive people out of the market. I don't know where they would go, but to your point about average age of how long people hold their vehicle went up a year from 6.5 years to 7.5 years. So people are keeping their vehicles longer. People have trade-in equity, a lot of trade-in equity. A new car, someone trading in a new car, they have about $7,200
Can I just ask a question? You're saying consumers have trade-in equity.
equity.
Okay.
So when I come in to buy a vehicle, if I have a vehicle, there's a high likelihood that I will have equity in the vehicle that I own.
Really, because I'm thinking about those pandemic days where you had consumers playing.
This is a
Yeah,
good
that's what I'm
point.
like.
I get
I'm
where you're
thinking you're
coming.
gonna
But
get
remember-
more customers with negative equity.
Remember, I hold on to my vehicle an average of 6.5 years. We're pre-COVID at that point.
Yeah.
I bought my vehicle for 44% lower than what the market is today.
Yes.
Okay. So I've been paying it off. And remember, my interest rates were way lower too.
Oh yes.
So, and I had a more traditional loan,
this is true.
right? 60 month, maybe
Yes.
72.
Yeah.
So I'm rolling.
Yeah.
But 25% of buyers don't have any equity. So there's like sort of a bifurcation in the buyer profile. So this is kind of where I'm getting at. What do dealers need to do? I'm calling it consumer math
Okay.
because some buyers come in. Well, first, let me step back a little. All consumers are going to have sticker shock.
Yes.
Okay, so to your point, payments. I don't know if you recorded. I'm going off of the tangent, but new vehicle payments have gone up from about I think $550 pre-COVID to about, let's just say $750 now.
Yeah.
That's the average.
Yeah.
So when you look at what I paid new in 19, I get a used car. What I paid for a used SUV in 19, I get a compact car. It doesn't work.
And a used compact car.
Yeah. Now, so the affordable payment, like way back in that 19, I could buy a used RAV4, CRV, whatever, and it was affordable. Now, when I come in, I can get a Corolla or a Civic, which there's barely any anyway. So finding one will be tough, but my payment now is going to shock me on, wow, I can't get a new car anymore. Oh, wow, I can't even get an SUV anymore. So it's a crazy thing.
Yeah, it's a real challenge, and dealers have to be able to flex. They have to be able to figure out how to find those profitability levers within their dealership for their operation. So when we think about looking across the industry, what are some of the most effective strategies that dealers could be using to optimize used car profits?
Yeah. So one thing I'm going to say is super important is understanding that customer psychology. It's way different. So now you're going to get almost every credit tier looking at used as an option. So like a lot of research is saying that used vehicles for like higher credit tiers used to be kind of a fallback. Now it's like a default. They look at it as...
Or they're looking at it for their child. In
that case, you're probably going to run it. It's like becoming a lot more rational to consider a used as not like it's a bad substitute. It's just part of what I'm going to look at. So because of that, I would argue that the way that you treat your used buyers is going to be totally different. Because you're, in all likelihood, the sort of the pool of consumers are going to be a mix of all kinds of different credit tiers, and you're probably going to run into folks that normally would be always a new buyer because they're at that high credit. They probably have good trade-in. They're probably going to look at you. So what does that mean? That means just make sure that your experience that you have in the new and used areas are the same. And most dealers, honestly, are doing a fantastic job at this. I mean, I've been working with dealers like using data and the experience, and we've seen used operations become more and more important. So it's already there, but really, you really want to think about that. Then the other thing is back to the consumer math thing. You are going to have consumers with seriously different situations, and you're going to have to figure out how to work with them. And one way that when I think about like different strategies is you don't want to sell a person that needs an SUV a car. They're never going to come back to you if you put them in that, and they're going to be bummed and the experience will be horrible. So you have to figure out, what do I do? Some franchise dealers, for example, might need to reach down to older vehicles that maybe they normally didn't play that old. Maybe they always like their lease maturities, but there's not that many and they're still expensive. So maybe they have to sell 5 or 6, 7-year-old vehicles. Good news is automakers have been making better and better and better cars, so they last longer. But then you have the idea of using certification to maybe like, I'm buying a 6-year-old car, maybe I certify it for 1 year to give them like that confidence that they even buy an older model. 6 years, they still look pretty good, but you add that warranty and confidence, so you almost have a good low price substitute, and then you can maybe get that consumer in the vehicle that they really need.
Yeah. Hey, Jonathan, I appreciate what you're saying about, because of the affordability and the average car payment being that $750 a month, that today looking at a used car isn't necessarily, I got to look at a used car, which I think then must have a positive impact on dealers' certified pre-owned program. And therefore, it's no longer, I can't get new, I've got to go used, but they're coming in and maybe looking for that certified pre-owned vehicle to begin with. Have you seen that from the data?
It's hard for me to say that they're actually, because I don't really know. But what I do know is the manufacturers that have certified as a tool in their brand, like Toyota, BMW, Honda, Subaru, they use certified as kind of it's just part of their used operations, it's inherent. Some manufacturers aren't doing as well. I won't mention them, but they know who they are. But it is pretty much across the board that these manufacturers that I would argue have a used vehicle operations strategy are using CPO. I think that has a pull. And you have like Toyota and Honda actually have commercials where they're promoting CPO. And I'm ignoring the luxury brands, but also like a Lexus and BMW, it's part of the experience. So to me, yeah, there's probably that draw. And there's another benefit though. I mean, I could say that it's not just the value that you're giving to the customer, you're also getting from a dealership standpoint, more loyalty and an OEM standpoint. So loyalty increases from 33% to 50%, meaning if you buy non-certified used, you have a 1 in 3 chance that consumer comes back to you. You sell certified, it's 1 out of 2.
Yeah.
So, and days to turn is quicker. So you're turning your inventory faster with certified. Don't remember the numbers off the top of my head, but I think it's about a 14-day variance, certified versus non-certified. So you got to do it. And then to me, the other cool thing about it is it enables, independents can use it too, because you have third parties that will create it. But franchise dealers have a unique opportunity and OEMs have a unique opportunity to really collaborate together. Where any time that you can create, like remove friction between the OEMs and franchise dealers,
It's always a good thing.
They should take it.
Yes.
And to me, this is a competitive advantage for franchise dealers because an OEM certification it just looks good.
It does.
So to me, when I see low certified penetration, I think change it now because the market is perfect for it.
And that certified engagement from the dealer also directly impacts their service department and operations.
You got it.
And it's all about get that certified customer with that certified, whether it's a 30-day, 60, 90-day limited warranty in your service department so that they then in turn will be back to buy another car.
You got it. And then it all is that flywheel, right?
Yeah.
Because now you're getting them back. You've generated all that money from service. They know who you are. You have a great customer. And when they come back, hopefully things are going to be better for everyone. They're back in your dealership and you have that higher propensity for them to come back with certified. So it's all around great thing.
Jonathan, last question I have for you is looking ahead without, having a crystal ball. We've talked about, the affordability, the inventory, the used car market, and what dealers need to be focusing on to help to continue to drive that profitability in the used car department, which is so critical. If you were advising a dealer principal who's listening to this on how to lead through the next 12 to 18 months their overall used car operations, what fundamentals would you anchor to regardless of what the economy does?
I mean, everyone's going to talk about AI, right? But to me, back to the idea of dealers really pivoted nicely about 15 years ago to really utilize data to help make decisions. That was great. So that happened. COVID, we shifted to digital aspects of the purchase. So we streamlined the experience process, and the used car also was able to benefit from that because you're able to now understand the data of the whole market from all the digitization. Everything's like online, things are described better. So foundationally, we've created really good data and processes. So now moving forward, now we can move to more like technology advances. Chatbots are cool and everything, but the analytics and the agents, adding that to your acquisition strategy. So understanding your data, using agents within some of your tools to basically say, hey, there's a 3-year-old full-size pickup available for, in the auction. I would instantaneously be able to understand what I would be able to sell that vehicle for, an estimate on how quickly I can turn that vehicle, how many I need, and whatever. So if you think about that in a grander scale, you can now really understand, from if you're a dealer group and you have multiple locations, you can create like inventory optimization based on regional demand. You can even get down to configurations like packages and individual pieces of content that do better without really doing anything more except letting AI and advanced analytics do the work for you. So you're not really like taxing yourself more. You're just using the insights you're getting from data analytics and AI to augment like your already good operations. So to me, we're just ready to capitalize on these kind of tools.
So I'm hearing data, AI agents for inventory optimization to know what you have in your inventory or what you have access to.
That's right.
Key ingredients as we look to move forward in the next 12 to 18 months for dealers and their used cars, which will in turn being able to, I guess, access that vehicle easier and know what you have available for that customer when they come into the dealership or when they're contacting through your website or your lead gen, wherever they're coming from.
Yeah, and that's a good point too. Utilizing AI upstream too to make sure that you back to the consumer math.
Yeah.
If I know what that consumer situation is from a budget standpoint, a trade-in standpoint, I could feed them the right vehicles to consider when they come into the dealership too, and make sure that you're offering the right vehicle that aligns with what they can afford and what they need. So that's another great advantage upstream of AI, just making that seamless experience of buying the vehicle and getting the right vehicle to the right consumer at the right price, et cetera. It starts from the top.
It does. Well, Jonathan, thank you so much for the insight that you provided us today. It's so critically important that, we recognize the importance of the used car operation in the dealership and then that downstream impact with service. At the end of the day, used car and service, in many instances, that is the anchor of the dealership.
Yeah.
So making sure you have the right strategies in place are so important.
Yep.
So thank you so much. We really appreciate you being here.
We really appreciate you joining us today on The Walk Around, and we hope you enjoyed the episode. Please be sure to like, share, subscribe, and follow us. We look forward to seeing you next time on The Walk Around.